There are 9 common ways that crypto investors, new and experienced alike, get wrecked. Can we avoid them, or are some of them inevitable? Hello, I'm Crypto Casey, and in this video we will explore the 9 most common ways that people lose money in this space so we can identify and try to avoid these scenarios to become more successful crypto investors long term. Each of these pitfalls are easy to fall prey to, but they are just as easy to avoid once we are aware of them and stay mindful of them throughout our crypto investing journey together. Awesome, so let's check out the 9 most common ways crypto investors get wrecked. Treating crypto as a get-rich-quick scheme. I'm sure crypto piqued many of our interests initially after hearing stories of people throwing a relatively small amount of money into a project, like a couple $100, and then it becoming worth several thousand or hundreds of thousands, or in some cases millions of dollars over a few months or even overnight. And although this sounds extremely appealing, it's not the expectation we should have when deciding to invest in cryptocurrency. Sure, there are a ton of amazing stories out there about people making massive amounts of money in a short period of time, but I can tell you that 99% of it is absolutely luck. Why is it so? Well, first of all, the cryptocurrency market is largely unregulated, which means it's extremely susceptible to manipulation. With the naturally high price volatility from being a brand new asset class, in addition to blatant and deliberate manipulated price movement, the crypto market valuations swing violently and radically. High risk creates potential high reward scenarios, coupled with drastic price movements in between. You can see how a lucky investment made at the perfect time into certain projects creates a perfect storm for some people to make a ridiculous amount of money quickly, assuming they take profits and retain some of the gains. And unfortunately, what a lot of new and experienced investors alike fall prey to is gambling a significant amount of money they cannot afford to lose. And unfortunately, what a lot of new and experienced investors alike fall prey to is gambling a significant amount of cash they cannot actually afford to lose in hopes of getting that lucky moonshot that makes them millionaires overnight. Treating crypto as a get-rich-quick scheme will leave most of us absolutely wrecked. So don't do it. Instead, set aside an amount of money you're looking to invest for the long term in DCA or dollar cost average into positions. And dollar cost averaging is when you decide on a certain amount of money, like $10, you're going to invest at a certain frequency, like once per week, into Bitcoin or similar, regardless of price or other factors. That way, you are building your long-term investments with less exposure to price volatility, with a proven strategy that way more people have used over the past few years to build massive amounts of wealth than the small percentage of gamblers that just got lucky. Cool, so let's move on to the next way crypto investors get wrecked. Trying to time the market. We've all definitely fallen prey to trying to time the market by following so-called chart gurus, mirroring so-called trading experts' trades, making decisions based off of the fear-greed index, jumping into projects based on key dates on the roadmaps, all in hopes of trying to time the market in order to buy at the absolute lows and sell at the absolute highs. And for aforementioned reasons, that being the crypto market is heavily manipulated, unless you get lucky, you will get wrecked by trying to time the market. No one can predict and time this market. Again, sometimes people get lucky, but even if we consider Plan B's 3-month winning streak at accurately predicting Bitcoin's price at the end of each month for August, September, and October of 2021, come November 2021, his $98,000 Bitcoin prediction was off by nearly half. So imagine if you got into positions under the assumption that Bitcoin was going to hit 98K, but instead it dropped from about a 68K high to 54,000. Yeah, you would have gotten yourself a one-way ticket to Rekt City. I don't care what crypto expert, influencer, guru you follow, I promise you that they have no clue what the price of anything is going to be in the future, and we are all out here making wild, random guesses at best. So don't try to time the market or predict the market like we discussed earlier. Dollar cost averaging into positions to hold for the long term is superior. Believe me, your life will be much more enjoyable and carefree once you adopt and stick to the long-term DCA investment strategy with crypto. Falling prey to FOMO. Crypto investors get wrecked when they fall prey to FOMO. FOMO is a popular acronym used in crypto investing that stands for fear of missing out. Most people probably got into crypto near market tops because they had been watching the prices go up and up and up, and each leg up, the searing pain of waiting too long to jump in gets worse and worse until finally they FOMO in. They FOMO in and it either goes up a bit more before crashing or it starts crashing. Wrecked. Or another scenario people FOMO into is, let's just say there's something big on a project's horizon, like, I don't know, Cardano's smart contract launch. People FOMO'd into Cardano like crazy leading up to the super hyped up smart contract launch date. The price reached a new all-time high of about $3.09 a few days before, and then following the launch, Cardano didn't all-out crash, but it has been a slow, painful downtrend to where it currently is at the time of this video, which is about $1.50. And let me share a personal story of how FOMO got the best of me recently. So I had been anticipating the drop of an NFT project called Mechaverse, and I knew it was coming in the back of my head sometime that week, but I didn't bother to solidify the date. So one day I'm on Discord and I see a message flash that minting window was open, but just for a short period of time, with limited mechas per wallet. So without skipping a beat, I click on the link, connect my wallet, and long story short, pretty much ended up sending 4 ETH to a scammer. Rekt. Amazing. So the FOMO is real, fam. Be aware of it, identify it when you start to feel it, and resist, or just get wrecked. Falling prey to FUD. Crypto investors get wrecked when they fall prey to FUD. And FUD is a popular acronym in crypto that stands for fear, uncertainty, and doubt. People that capitulate to FUD sell most, if not all, of their positions in certain cryptos because of a few reasons. Maybe some bad media was released about the project, like a hack, failed or delayed launch, a founder leaves or got in trouble, or maybe a competitor hits the scene and starts trying to get market share. Sometimes people experience FUD from things unrelated to crypto that could affect the market, like a new COVID variant, interest rates increasing, or fears of a housing crisis. FUD also happens if a person isn't comfortable with the sheer volatility of the crypto markets, and watching the wild swings of value of their portfolio causes them to lose sleep, so they just sell everything. Most of the time when crypto investors make moves based on FUD, they miss out on opportunities to make gains. Rekt. For example, maybe they got scared back in June of 2021 and sold everything when Bitcoin went from, at that time, new all-time highs of about 64K down to as low as 29K that quarter. At the time of this video, we have recovered, hit new all-time highs, and are at about 57K. So in the end, the best thing to do to avoid falling prey to FUD is for each project you are invested in, and any project you're looking to invest in, you need to decide how long you want to invest in it and hold the project. Like if it's a short-term play, like a month or to a year, or a long-term play where you want to hold past a year, or you can decide at what price point you want to sell it, like if it doubles in price, triples, or similar. Then stick to your investment plan. Creating an investment plan and sticking to it is key to becoming a successful crypto investor. Second guessing every decision. Sometimes even when we formulate a plan, like which projects we are going to invest in, how long we're going to hold it, and at what price we're going to sell it, and what we're going to do with the profits once we actually take action, we second guess our decision. We start to waffle thinking, man, did I pick the right project? Maybe I should have gone with another one, or maybe I should have just put half and used the other half for this other project. Or man, I think I bought too high or I sold too low, should have waited, maybe should undo the trade and think more. As crypto investors, it is very natural to second guess every single move, and it's very tempting to want to revert decisions that we make. As we discussed previously, create a plan for each project and stick to it. Second guessing everything will leave you emotionally wrecked, as well as the value of your portfolio over the long term. Make a plan, make decisions based off of the plan, and stick to the decisions that you make. Falling prey to scams. Scams in crypto are everywhere. Scamming is absolutely rampant in this space. There are scam comments below this video pretending to be me or claiming to be expert traders with trading bots. On Instagram, Twitter, Facebook, Discord, Telegram, TikTok, and pretty much every social media platform out there, there are scammers pretending to be me or claiming to be expert traders with trading bots. There are scammers that spoof email addresses to look like the emails are coming from Casey@CryptoCasey.com and other popular crypto influencers, as well as companies like Coinbase, Ledger, and similar. There are scam websites that are set up to look like official ones to try and steal your login credentials or your private keys. There are endless ways we can all get scammed as crypto investors. But if you follow a few simple rules and stay aware of key things to keep in mind, you should stay safe. Basically, scammers want your login credentials to your crypto accounts, all of your financial accounts, your cell phone provider. They want your private key, which can be in the form of 12 or 24 words. They want you to install software on your computer they claim will turn a profit. They want you to click on links from text messages, email, or direct messages on social media to direct you to fake sites, or that will install malware on your device. And they also want you to send them crypto or cash. I made a video for crypto investors about different products and services we can use to increase the security of our investments, which you can check out by clicking on this link above. At the end of the day, if anyone asks you to install mining or similar software they claim will make you a profit, or if anyone asks you to send them crypto or money they say they will generate a profit for you, steer clear. They are trying to steal your money. Also, never, ever, ever, ever give anyone or type into fields on a web page or in an email or similar your 12 to 24 word seed phrase. Because if you do, you will lose all of the crypto in that wallet, 100%. And if you want to learn more about how crypto wallets work so you can better protect and secure your funds, I made a video guide for beginners about crypto wallets that I almost guarantee will make you have that eureka moment where you finally understand the importance of your wallet seed phrase. You can check it out by clicking on this link above. If anyone is claiming they can make you money that involves you sending them money, installing software on your devices, or clicking on a link to sign up for a product or service, they are a scammer. So watch out, stay mindful, and remember, I nor any other crypto influencers will ask you to send us crypto or any money, ever. Not ever. A good rule of thumb is to never send money or crypto to anyone you don't know, ever. Unless you're willing to lose it all and get wrecked. Not doing your own research. Many people in crypto make investments in projects based off of recommendations of crypto influencers or their friends, family, advertisements, or random people they chat with in person or on the internet. Which is fine unless you decide to invest in it without doing your own due diligence and personally taking the time to research the project. Jumping into a project without doing your own research will usually leave you absolutely wrecked. So like we discussed earlier, do not FOMO in because you could get potentially scammed by someone, or you may find yourself invested in a project that you don't want in your portfolio. When you hear about a new and exciting opportunity, take a day or a week or so, however much time that you have without rushing into it, and if you decide based on your own research that it's a good match for you, decide how much you're going to invest, how long you're going to stay invested in it, or at what price you're going to sell, then start to dollar cost average into a position. Rushing through complex processes. Rushing into crypto will get you wrecked. Rushing through complex processes like a new NFT mint, staking, yield farming, trading on decentralized exchanges, and all kinds of different crypto activities available to engage in will leave you wrecked if you rush. Just like how I rushed into the fake Mechaverse mint, got scammed out of 4 ETH, all because of FOMO and rushing around, capitulating to FOMO. I've had friends rushing around trying to buy $100 worth of crypto on a decentralized exchange without realizing the gas fees were $200. And it's not until you rush through and realize you lost money on the trade until it's all over with. Or some people accidentally end up on the wrong site, connect their MetaMask, get scammed, and once they realize it, try to rush and send everything out of their wallet, thinking that they are going to beat the scammer from draining their wallet. Little did they know, because they were rushing around, the website ran a script where basically no matter what recipient address you paste to make a transaction, it reverts back to the scammers, and you end up sending all of your funds out of the wallet into the scammer's wallet anyways. That's why it's important to take your time, double and triple check the wallet address you're sending funds to, and remember, if you accidentally send money to a scammer and did not give them your seed phrase or private key, they don't have access to your wallet. In a case like this, check out the wallet guide I mentioned earlier, and using another wallet app, restore access to your wallet, then safely send funds elsewhere if that's what you would like to do. Cool, on to our final common way crypto investors get wrecked. Treating crypto as a set it and forget it investment. Crypto is a new and emerging type of digital asset class that we are all extremely early in as investors. Staying up to date on the latest news, regulations, project developments, hacks, technology, tax laws, etc. is crucial to being successful in this space. Treating crypto as a set it and forget it investment is a one-way ticket to Rekt City. Now, although it may sound overwhelming, it's not actually that much daily or weekly upkeep that you need to do. With the significant amount of upward price potential and opportunity to generate a massive amount of wealth in a relatively short period of time that crypto presents us with, the upkeep is extremely worth it. In fact, if you haven't yet, you can check out my video guide on the 3 things you can do daily to experience long-lasting success as a crypto investor by clicking on the link above. In it, I tell you my daily upkeep routine when I'm on vacation or have other work commitments outside of crypto, as well as the sources I use to make the process simple and easy for beginners and experienced crypto investors alike. So check it out. Awesome. Well, thank you so much for taking the time to watch this video, and I hope you found the information helpful and use it to keep your investments secure. If you enjoyed the content, please make sure to like this video and subscribe to my channel for more crypto content. So have you been wrecked in any of the ways we explored? Have you been wrecked in other ways we didn't discuss? What did you learn from the experience? Let me know in the comments below. Be safe out there.